Okay, Swad asks, could you walk through the trade management for the DMI today? How would you have managed the risk if you got short at the upper zone, 43.64? That was our bear zone. Stops, targets, how you manage once the bull zone was hit at 48 to 52. All right, we won't go into all detail here because, again, different people have different approaches. But the classic approach, if you had gotten short at this upper area here, would be to initially take a scale, probably here, probably into VWAP. This is also, prior value high and whatnot. So it makes sense. The delta was pretty strong coming into the open, so it also makes sense to take some profits here. Granted, this looks like some pretty good momentum that's coming in directly from a bear reference. Still, the scale makes sense. Okay. Right into prior value, right into VWAP. The next place is at our opposite extreme intraday, which is confluent with our bull line in the sand. It's up to you. Now, I'll tell you the bear zone comes from a higher time frame than the bull zone, so it gets a little bit more weight. The green zone gets a little bit more relevance. I give you guys know I've been talking about this big downside potential in the S&P, right? It hasn't played out, but it's good to put ourselves in position, including yesterday with the ad. I think that was the S&P, was it? Yes, it was. Um, where was I? So for me, the bear references, including the higher, and our hint highest of time frames, they're more bearish. I know they're in a bullish condition, but they're bearish in terms of where they are trade location wise. So to me, this gets a little bit more weighting. So for me, it makes sense to hold a core and at least see what happens here. If you see a big reversal on the tape and stabilization here, then exit the core position. You've already taken at least one really good scale, if not a second really good scale right here. Okay. Depends on how many lots you're trading, obviously. A lot of you are in the micros, so you can trade 3 micros. It's not a big deal. So the stop was above the swing. The stop still has not moved even to this point in time. I would not move the stop until we clearly get this contextual shift and we go to a downtrend intraday. And at that point, you could place the stop somewhere around this area. If you hadn't taken any scale into this area or whatnot, here we are in a pretty large extreme intraday. This is a place where, we're capitulating, capitulating volume wise. Cumulative delta is cracking. It's not going to be sustainable. It's very bearish, but it's not sustainable. So this is a smart place to scale. I'm giving you options here. Okay. Here's where I had a lot of traders initiate fresh shorts if they had already flattened out, or if they had done stupid things like some of my desk trader or one of them and tried to get long up here, if you can believe it. Here's where some of them got short. Some of them held for quite a long time. Some of them got stopped here, which makes sense. Intraday, we're failing to hold a downtrend. But that's why you screw your day up when you screw it up here. If you're in from here, you can maintain a more flexible stop and you don't have to risk giving back P&L if you're short from here or if you're short from here. Okay, both of these were valid short opportunities. Here's where we start to get some dissonance with our intraday framework. So I don't see this as fresh opportunity to initiate shorts. I only see this as a way to hold a loose leash core position if you got short initially. And if that's the case, final core position, we know that we're holding for this.